Hello, everyone, and welcome. My name is Sean Walters. I'm the Chief Executive Officer of the Investments and Wealth Institute. Welcome to this special research presentation. The Investments and Wealth Institute, in case you don't know us, is the premier technical community and the leading talent development provider for financial advisors, advanced financial planners, investment consultants, and private wealth advisors who embrace excellence and ethics in their practice of financial advice. It's our role here at the Investments and Wealth Institute to provide you with the most relevant knowledge, insights, and tools to your clients and help you to distinguish your expertise in a global and highly competitive marketplace. The topic of this research presentation today is, in fact, a big aim of ours to try to help you in that regard. Our job is to keep you at the leading edge of your profession, and one way we continue to do that is to conduct research like the research presentation you're about to receive, which provides you with additional insights and expertise on how to better serve your clients, run your practice, deliver the services that your clients expect of you. Today, I'm pleased to be joined by Julie Littlechild of AbsoluteEngagement.com to talk about our most recent 2021 investor report. The 2021 investor research we will explore today has been conducted for several years in a row and looks at the changing client perceptions regarding the advisory relationship and outlines the skills and competencies that high net worth clients value in their advisors. This research was supported through a research grant from Hightower Advisors and Tays Corporation. Without further ado, I'm excited to introduce my friend Julie Littlechild. Welcome, Julie.
Thank you so much. I'm thrilled to have a chance to talk about the research today.
Julie is founder and chief executive officer of Absolute Engagement, a firm that conducts ongoing industry research and helps advisors design and deliver client communications and an overall client experience that reflects what is most important to their clients. I'm glad to have you here, Julie, to share a bit more about this research that we've been working on for several years now and what it tells us about what clients want from their advisors. Can you give us an overview of this latest edition of the investor research?
Yeah, absolutely. So, and I do think that's the beauty of this research is that we've been doing it over many years. We go back to 2008, but we've had this partnership for the last number of years, and that really gives us a very different kind of insight because we're able to look at change over time. And I don't think there has been ever a time when we've wanted to look at change over time as much as we have over the course of the last year and a half or so. So just by way of introduction, when we do this research in the US, we go out and speak to 750 high net worth investors. The minimum household wealth there is 500,000, but goes up to a full sample at the 5 million plus. But more specifically, we're looking to talk to individuals who work with a financial advisor, who contribute to the financial decisions in their household, and of course, who meet those investable asset criteria. So that's just a bit about the sample. It's been a very similar sample from year to year. Now, we just wrapped up this research in 2021. In 2020, we went into field on March 10th. And we all remember this because we had, of course, no idea what was about to happen. And so a lot of our focus with this study was really looking back at the last 18 months as well as at the overall needs of investors to understand what had happened. Now, when we think about investor perception and the last 18 months in particular, usually our mind goes to the financial impact. I think it's the first and logical place to start. What we learned, however, is that, and I think this is in contrast to, say, 2009, is that clients told us, investors told us that they were almost equally as likely to have been positively as negatively impacted by the global pandemic. And of course, we know that to be true anecdotally, but we could see that in the data. So almost half said there was no impact, and then we see about 29% saying there was actually some positive impact. But the reality is that isn't the story of the global pandemic. And we knew that going in. It was less about the financial impact and far more about the impact on our lives. And that data we can start to see quite clearly. So for example, almost 70%, so 69% of the investors that we talked to said that there had been some impact on what was important to them when they thought about the future. And that's a really big statement when you think about it. This isn't just financial. They're saying there is some impact. In fact, 43% said it was a 4 or 5, so really quite significant. So ultimately, that is the context in which we start to look at the research. Things are changing. Our views for the future and what is important is changing. And I think that is largely the context for investors as they think about making financial decisions, which is why it's so important for us. Now, they did tell us they were going to change some behaviors. And it was a bit all over the map, to be honest. About 27% said that they were going to spend less overall. We had 24% saying it was time to update their financial plan. Another 22% saying they were going to update their will. So there was a lot of different tactical responses, I think we could say, to what we experienced. But some of the research that I thought was the most, or the findings that I thought were the most compelling, is when, again, we focused at the deeper level of how investors were really thinking. So one of the questions we asked was, how has the pandemic actually impacted your view of the future? So we know that over 60% said that it has impacted their view of the future, but how? And there are a couple of findings that I think are important. First of all, that how we think about the future is changing. I mean, that's sort of the overall finding, and that's important. But I also noticed that there isn't a typical response. That is to say, we didn't have 80% of investors saying, this is how it impacted me. In fact, when you look at this chart, 25% is the highest bar, and it's a big one, it's an important one. What is important to me has changed, is what they were telling us. And so I think the idea that there isn't an overwhelming typical response, but a large proportion of clients are in fact changing, tells us something about the need to understand clients at a very individual level. We can't make assumptions about what that is. And this was actually a trend that we saw right through the data, that what was emerging was a trend of change in what matters to me and what interests me and what concerns me. But we couldn't say that all clients were feeling a certain way. And that just reinforces this need to really understand clients and make sure that we aren't making assumptions about what's important to them. So just digging in a little on that, as much as I said there weren't overwhelming trends on the last slide, on this one there actually are some fairly significant ones. So we're going a little deeper here. We're looking at what concerns clients. And there were a lot of concerns, as you can imagine. We're just looking at the top 5 here. Personal and family health. This was one of the #1 changes last year, and it continues to really be an important issue for investors. Market uncertainty and turbulence. Even though markets haven't been as bad as some thought, this is still a concern, and the concern is the reality. Helping my kids make good financial decisions, job security, caring for elderly parents. So again, what we're seeing is a variety of different concerns, and we're seeing concern. And I always go back to this being the context for how people are thinking about their future and their investments and their plan. We also asked what clients were interested in learning about. So this is more what they're concerned about, and we looked at some of those topics. Now, what we're looking at is the top topics that were selected. And right up top is changes to tax legislation as a result of the administration, keeping personal data safe, and again, health and wellness makes an appearance on this list. And I think what this is telling us very clearly is how much investors' views of the world and what they care about shifts, both, well, not just both, but in response to political changes, certainly in response to personal changes and fears like we've seen with the pandemic, and more generalized trends like data security. All of these things are really coming to bear and changing what clients are interested in learning about. So this is just a quick overview, but this is some context, if you will, for how we began to then dig in and look at how clients were being supported by their advisors, and some of the more fundamental things that were changing as it related to the client experience and as it related to their expectations around things like expertise and designation. So I'll share a little bit of that data with you as well. I have to imagine that one of the big topics on everybody's mind is, well, how did advisors do, right? When we think about the last year, how did they really do? And the news there is really quite good. And I think we should pause on that for a moment and feel good about that. As you see here, 87% of investors said that they were somewhat or very satisfied with the way that their advisor supported them through the global pandemic. And it wasn't easy. So good to see that. That in essence, that's a glass half full interpretation of the data. There is a glass half empty, and I'll share that as well. Because as we started to dig into this, so feeling good overall, but then we talked to investors about the ways in which their advisor had changed how they supported, whether that was through conversations or resources or tools. And again, bear in mind that 3/4 of clients said their advisor had done something differently during the pandemic to support them. So I think that's the good news. That's the positive. I was interested in the fact that only 35% of them said, my advisor asked me if the pandemic had changed how I think about the financial future. 30% said my advisor talked about how I was feeling during the pandemic. And I say it's the glass half empty interpretation because in some respects, we might wonder why that wasn't always a conversation. Now, it might have been, but this is how investors were interpreting it. And I think that's important to think about. And really, as much as anything, all of this suggests that we need to be having different conversations with clients, that there's a lot on their mind, there is vulnerability, there's lower self-confidence, there's topics that they're thinking about, and it really drives us to deeper and different conversations. So the other area that we really wanted to look at was to understand how the client experience needed to change. So we focused on sort of higher level issues, but let's get into some of the specifics because in my mind, this was some of the most important questions we could ask. We've talked a lot in the industry about how things are changing. We've made a lot of assumptions. We've talked about when we get back to normal. And the question that we all had as we sat down to think about the research is what's normal going to look like? And what's that going to mean for advisors day to day? I think it's quite clear that the changes that we've seen are not temporary blips, that they are more enduring changes. And so we dug into the specifics of that. We talked to investors about how often they want to meet with their advisor, for example. Now, on the face of it, that's not the most compelling data point, but it's what they were telling us below that was. So, just for what it's worth, about half, 48% of clients said they wanted to meet with their advisor once or twice. About a third said 3 or 4 times a year. Now, that could be good, bad, or indifferent, depending on the clients and the advisor. But what I thought was more interesting is that about 1/4 of clients said that they actually want more contact, more reviews in the next 12 months than they did the previous 12 months. So it's them saying they still need more support. So is it 100%? No, it's not. It's 1/4, and that 1/4 is largely comprised of the highest net worth clients and the youngest clients. There was sort of an interesting composition there. But what it means net is that more time is going to be invested, obviously, in meeting the needs of clients going forward. And it's a practice management challenge that I think we need to consider. We also dug in on how meetings were being held. And look, we've talked about this ad nauseum in the industry, right? It's everybody's zoomed out and are we going to get back to in person? What we saw in the data is that just over half of clients said they are clamoring to get back to in person. Now, you could look at that in one of two ways. It's the highest bar that we're looking at, but at the same time, it's only about half of clients. And of course, that means that the other half are either saying, I'd prefer more web meetings, that was almost 1/4, or perhaps I'm ambivalent about it. I don't have a preference. Now, to me, this is a really significant finding because it's telling us that going forward, we need to make this hybrid model of meeting with clients exceptional. We can't just do it because we have to do it because it's what they're going to expect. Now, one of the conversations that I know I've had a lot over the last year is in chatting with advisors who are saying, I find it harder to connect on Zoom. I don't think I can. It's harder to meet with a new client. There's been some fears and uncertainties and concerns around digital connection, if you will. And one of the things that I found really most fascinating in the research is that when we talked to clients, there was no ambivalence. 76% of them said that it is still possible to have meaningful conversations when they're meeting virtually. So I don't think we need to worry about this. Now, we might need to up our skills on that, but the data to me is absolutely clear that clients feel that this is possible. In fact, just to go one step further, 19% of them said they felt those reviews were better virtually. Now, maybe that's because it was a more convenient location or a more convenient time, or they could involve more people. Only 22% said that they weren't as good. So we have an opportunity to meet client needs. We can embrace this perhaps a little more comfortably by losing some of the assumptions I think that we've been making. So, it's a quick download on at least some of the initial data points that we saw. Sean, I don't know if you wanted to jump on and if we've got some questions at this point.
Excellent job, Julie. As usual, thank you for running through. There's a lot of data that came back on this survey, and there's a lot of things that we could be talking about. The report actually goes into more detail on a lot of the things you mentioned. One thing I would imagine is on the minds of some of the advisors who are listening to this is it's really important to understand where their clients are at and what their clients are perceiving from the advisor. Where do they go with this? I know we've worked on this research for several years. The key finding every year comes into differentiation. How can you provide us with some background about this exceptional advisor model that you've helped us establish over the last several years?
And I think so much thought has gone into this idea of the exceptional advisor. I'll put it on screen just to talk through it. This is something that I know the team at the IWI has been not only developing, but supporting over the last number of years, helping advisors to understand the components of this and then providing the tools and resources to take action. And this was really born of the research, like all great frameworks. It came from data going back a number of years ago when we went deep on what do clients consider to be most important and which aspects of the relationship are correlated with deeper engagement. What we found at the time and what we find now is that the foundation is the foundation. It is still solid. It is about ethics. It's about expertise. And that has not changed at all during the pandemic and before and after. So I take some comfort in this idea that what's fundamentally important to investors is still there. The pieces along the top were really about the other components of the relationship: personalized approach, capabilities, guidance, and service. And what is, again, crystal clear as we looked at last year's data, as we looked at this year's data, is that we've got to look at those elements in the context of the environment and in the context of different demographic shifts. So for example, last year, we spent a lot of time talking about how demographics were impacting what it meant to deliver exceptional service, for example. And this year, of course, we're talking about what does that mean in the context of the pandemic. So as much as the categories remain true, I think that the elements that are at the top there in blue, we've really got to be thinking about those in context and be willing to examine what it means. I did want to share another few data points related to that foundation because it's an important one and it was a really important part of the research. We asked a number of questions about what sets advisors apart, as you said, Sean, what differentiates. And not only did expertise become part of the foundation, it was also clearly part of differentiation. And so just to give you a little insight on in that, and there's a few questions on this, so a lot of data, but let me try to summarize it. What we saw is that really to a fairly overwhelming degree, investors were telling us that holding multiple designations was a way to really demonstrate deeper technical expertise, that they equated those two things. And that was 59%. 69% said that holding multiple designations means that my advisor can deliver a broader range of services. So they were connecting those two things. And over half said it was important for their advisor to have multiple designations. So we looked at it both in terms of having the core expertise, but also those multiple designations. And maybe one of the more interesting pieces, and Sean, I know this was something that you've been talking about, is this fact that since we started asking some of these questions, this has only become more important. So in 2019, when we asked if you were looking for a new advisor today, and that really is the question that I think is important, how important would those professional designations be? And we've gone from 29% to 47%. So over time, this has clearly changed and shifted as as investors are thinking about how they can validate expertise and what sets their advisor apart. And in fact, we saw that as well. 79% of investors said that the designations my advisor hold are an important way to demonstrate technical expertise. And you see on the other side of this, 73% said that these designations set my advisor apart. So important for all sorts of reasons, and it was a big theme of the research this year.
I want to come back to designations, as you might imagine, given my role. I do want to ask you to expound a little bit more on the loyalty question. When we did this in 2020, as you mentioned earlier, it was right in the eye of the hurricane. So we learned a lot about loyalty last year. This year, markets were down last year, so loyalty was down. It seemed somewhat logical. This year, markets are up, but loyalty's not up as much as it was pre-COVID. What's going on with that? And perhaps more importantly, what should advisors do about that?
Sometimes the data really paints a picture, and in this case, it's showing us very clearly that loyalty isn't, it may be influenced by market conditions, but it is not the only issue. When we saw loyalty decline last year, and it declined by about 10%. And what I mean by that is the percentage of clients who said that they were considering moving to a different advisor had changed. This year, there wasn't a huge difference, but there was still a bit of a drop. And what we were able to really see from the data is how much of that was connected to not the markets and not how their advisors were servicing them, but how investors were feeling, right? The vulnerability. And we calculated this client self-confidence index, which was really strongly correlated to loyalty. And that was telling us so clearly that irrespective of whether the markets were doing what we expected or better or worse, clients were saying they weren't feeling as secure as they could have, not feeling as in control or such a great sense of clarity. And I think that's continuing. I mean, that's the reality. It's not as if, vaccines went up and all of a sudden we were feeling confident about the future, right? We're still seeing some of the hangover, and I think it's an important lesson for us.
I'm going to ask you a follow-up question to that. Is there a changing role for advisors, given that confidence? Financial planning is great. It helps. A lot of your earlier presentation research slides showed that these advisors more than once a year need to be revisiting the plan, revisiting the objectives, looking at how is your life changing and how can we help you get to your perhaps refined objectives. But there's also something deeper, it sounds like, correct? That's tied to confidence and almost emotional outlook on are things going to be okay type of thing.
Well, they are, and I think it's important to acknowledge, because we all know as humans, our investment decisions and what we do is going to be colored by how we're feeling emotionally. It has to. And And what it's really shown us as we've been talking to advisors who have been talking to their clients about some of these issues is that the plan is still critically important, but it's caused them to maybe lead into that conversation differently, to pause, if you will, to go a little deeper, to give clients an opportunity to articulate how they're feeling and what that means, and how that, as a result of all of that, is going to impact the plan. I mean, it all comes back to the investments in the financial plan, but we've got to understand the context. And this is frankly a different skill for many advisors, and something I think we need to really focus on right now.
Yeah, excellent point. So back to designations, I would want to follow up with a question on that. One of the findings I always like to see is that they are differentiators. The second, which is in the report, you didn't touch on it, but is what characteristics of professional certifications do clients look for or expect? You know, the fact that there's ongoing CE requirements, whether the advisor likes it or not, that they can lose their marks if they do something icky or unethical, and that there's a non-profit objective third party and not a firm designation, for example. You know, the interest and importance of designation seems to have gone up yet again. What's going on there? Why do you think there's this rising level of interest among clients for professional certifications among advisors?
I mean, to some extent, I want to say there's greater awareness of what it means, but I think it's also that during any time of uncertainty, I think we're increasingly looking for something that we can use to validate our decisions, and that being able to hold on to something quite firm becomes even more important. And that is always how I see designations. It prepares advisors to do the job, and that's the most important thing. But it also tells clients something different. And you remember we did a fair bit of work one year on how to communicate around credentials. And I think, again, that's going to come to the fore, because it's not just having them, but communicating them. But I do think they give clients an anchor at a time when everything feels very uncertain.
Wow, that's a very astute point. Thank you for that. I think that's, something that's certain in uncertain times is kind of what you're saying there.
Yeah.
Well, I mean, as we kind of draw this to a close, there's a lot of research you've done on and around this very topic and engagement. This study highlights a lot of the work that advisors are doing. It highlights client perceptions, how advisors need to evolve and change. What sort of changes should advisors look to make as we kind of peer ahead into what the advisory relationship of the future starts to look like?
Yeah, I want to say there's so much, but then it feels overwhelming. And to some extent, I think the pandemic has forced us back to basics on some things, and maybe that's the key. Whether it's service and just evaluating the fundamental service offer that's in place, ensuring that it is responsive to client needs. I think we've had to react and really focus there. So, I think that really, as I look at the data, the things that come to mind for me is there is no, the concept of set it and forget it just doesn't work. We can't develop a service plan and a model and then just pretend it's not changing. This data is telling us that we need to be highly responsive to changes in the environment. It's also telling us that we need to have a very deep understanding of our clients, right? It's one thing to look at the data, but you're going to be sitting in front of a client and they're not going to have a sign saying I'm the average high net worth client, right? So we've got to have those deeper conversations. And I think, just to the last point, I think it's time to get very intentional about that foundation, to not assume clients understand it, to not assume it's there, but to really ensure that we have put everything in place and that we've communicated that effectively. Anything that we can do to create more self-confidence for clients, I think, is going to go a long way.
Excellent point. I'll just to reinforce what you've shared with us in the research, just tell a quick personal story. Right after the meltdown of March 2020, I was sitting here in this home office working as usual, and I got a call from my financial advisor. And I'd just gone through a whole bunch of changes, and he just had one question for me, and that's how's it going? And, opened up a 30-minute conversation. I felt supported. I felt as though I was getting a personalized approach, exceptional service, right? Because we scheduled something right after that. It turns out we ended up refining some mortgages, which saved me a penny or two. And I was scared to do that given all the uncertainty rolling around me, but he kind of unblocked me on that. The stuff that you're presenting, for those advisors that are listening, it's real stuff. It's really tangible. And I appreciate all the work that you've done over the years, Julie, to just kind of keep that in front of the advisor community, that the client voice is heard through these presentations that you deliver. So thank you for all of that.
Thank you. Appreciate it.
That wraps up our presentation for today. We understand the challenges that advisors face day to day, and our mission is to provide the practical tools and strategies that you can use to put that hard-earned knowledge to work in the real world, to add measurable value to your practices and firms and make a real difference for your investment and wealth management clients. The Institute delivers Ivy League quality, highly practical education to more than 30,000 practitioners every year in over 40 countries. Our professional designations, the Certified Investment Management Analyst, Certified Private Wealth Advisor, and Retirement Management Advisor certifications, in addition to our educational programs, help advisors deliver on that every day. For more information about the Exceptional Advisor Model, our advanced certification programs, or other research conducted by the Institute, including the new 2021 Investor Report, please visit investmentsandwealth.org. And I hope you all have a wonderful rest of the week. Thank you.